Hello and welcome to Smartkarma's corporate webinar. I'm Sanam Nanwani from Smartkarma. This week we are hosting Uni-Asia. We are glad to have with us Group CFO Lim Kai Ching. We will start the webinar with Kai Ching walking us through a company presentation, after which he will engage in a fireside chat with Smartkarma Insight Provider Osbert Tang. We are taking live Q&A, so I would like to request our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also share some links on how you can connect with Uni-Asia and read more research by Osbert. So please to keep a lookout for messages in the chat box. I now hand it over to Kai Ching to walk us through a short company presentation. Kai Ching, please.
Good afternoon, everybody. Welcome to this webinar. I'm Lim Kai Ching, the Group CFO of Uni-Asia Group Limited. Today, I have my Executive Chairman, Mr. Tanamoto. He also here with us today.
Hi, good afternoon. Thank you for joining us today.
Yep. And also our colleague, Ms. Yamamoto. Okay, she's also with us on this webinar today. Okay, so what I'll do is I will start to do a very short presentation followed by a Q&A with Osbert. Okay, so Uni-Asia Group Limited, if you remember, we actually came on Smartkarma last year. I'm very happy to be back, and hopefully we can come back again next year. So I will give a very quick presentation. If you don't know us, we are listed on SGX main board. We actually were founded 26 years ago in 1997. So this is our 26 years of founding, and we're listed on SGX main board on the 17th of August 2007. So our Bloomberg code and SGX code is listed. We have offices in Hong Kong, Tokyo, as well as Singapore. And we have a ship management company in Shanghai and a property asset management company in Guangzhou. Okay, so basically our business model is very straightforward. We acquire alternative assets at competitive prices, and we also provide clients solutions relating to such assets. So the assets we focus upon are vessels, ships in particular, small handy-sized dry bulk carriers. And for properties, we have properties in Japan as well as properties in Hong Kong. And we manage and operate these assets in order to enhance the asset value and recurring income. So the ultimate objective is to derive capital returns and recurring income, including charter income, certain fee income, as well as ad hoc fee income, including arrangement fees and brokerage fees. Now, our business are segregated into two main business segments, shipping as well as properties. And for shipping, we categorize them into ship owning and chartering, where we have 10 wholly owned vessels. Maritime asset management, where we have joint venture investments in ships, as well as for maritime asset management, it provides arrangement fees, services to our clients. And for maritime services, we provide commercial technical management of ships and ship-related brokerage services. For property, we have property outside of Japan, including in Hong Kong, and property investment within Japan itself. Okay, so for FY 2022, we achieved the highest profit in the history of the group, net profit of $27.9 million US. So our group's financials are prepared in US dollar and in accordance with IFRS. So if you recall last year when I came on Smartkarma, we mentioned about $18.1 million US of profit last year, which was the highest at that point in time, okay, in the history of our group. So we were quite pleased to announce that we have beat that target. So of course, investors will then ask, for FY 2023, will we be able to beat our target, our highest profit for FY 2022? I guess that will be on everybody's mind. Hopefully, we can address that. And because of our group profit, we are declaring a total of 8 Singapore cents per share to be paid on 31st May 2023. So these 8 Singapore cents per share comprise of a final dividend of 3 Singapore cents per share, as well as a special dividend of 5 Singapore cents per share. Now, if we have already paid 6.5 Singapore cents per share on 30th September 2022 last year for FY 2022. So that's for the interim dividend. So if we include the interim dividend that we have already paid last year, the total dividend that we paid for FY 2022 amounts to 14.5 Singapore cents per share. So that's more than double of what we have paid in FY 2021, and the highest dividend per share adjusted for corporate actions that we have paid in the history of the group. Now, turning back to our balance sheet, following a very good year for the past 2 years due to good shipping markets, we have also strengthened our balance sheet. Currently, our debt equity ratio is less than 1. And as you can see, our debt equity ratios has been continually being reduced over the years since FY 2018. We have current assets more than current liabilities, and our balance sheets actually primarily are made up of our fixed assets, which actually comprise of our 10 wholly owned vessels. Now, if you look at our cash, we have very strong operating cash flow last year, $34.9 million of operating cash inflow, and our total cash balance stands at $47.1 million as at end of December 2022. Now, in terms of borrowings over the years, with good profits and cash flow, we have been steadily paying off our debt, in particular unsecured borrowings. So now $72.7 million as at end of financial FY 2022. All these borrowings are secured by our assets, including ships as well as properties. And if you look at our finance cost for FY 2022, it stands at $2.8 million. Okay, so around the same level as FY 2021, mainly because of the increase in the interest rate. So most investors are also concerned with the increase in interest rate. How will it impact the group? We will continually be paying off our borrowings as our borrowings are backed by our assets. So unless we have a new acquisition of assets such as ships or new large property capex investments, otherwise the vessel borrowings will be repaid based on our charter income. And therefore, we don't expect a huge impact on the finance cost of the P&L with the increase in interest rates. Now, the next is the question on what will be the impact of our P&L for FY 2023. As we all know, shipping markets, especially the small handy-size dry bulk market, has been weakening since last year. So if we look at this chart where the orange color represents FY 2021 into 2022, and the blue color represents FY 2022 going into FY 2023, FY 2022 has been very strong in the beginning of the year, but has weakened. Okay, so part of the reason has been the port congestion due to COVID-19 has been eased, more traveling, and therefore the overall shipping markets has began to weaken towards the end of last year. So how do we see the shipping market going forward? Okay, the next chart shows the supply and demand for dry bulk carriers going forward for the next 2 years based on Clarkson's research. So this is from external research and then not from our own internal research. Now, if we look at the demand, which is represented by the blue line, okay, based on the estimation, the demand growth for dry bulk markets is expected to grow at 2% for FY 2023 and 2.2% for FY 2024. So all these figures, of course, it will continually be updated as the month goes by. And this was updated as at 31st January 2023. Now, if we look at the yellow color line, which shows the small handy-size dry bulk growth, it is expected to be negative 0.2% and 1.7%, negative 1.7% in 2024. Although the overall dry bulk supply growth is expected to be 1.8 and 0.3. So if we look at the overall dry bulk supply growth, as well as in particular the sector that we focus upon, small handy size, they are expected to grow at a slower rate than the demand. Okay, one of the main reason is because due to all the environmental concern, there's no standard what will be the environmental specification of vessels to be built in 2023, 2024, because the new environmental regulation is still unclear of what kind of ships, what kind of fuel that the ship should use in the future. So as a result, many ship owners are hesitant about placing order for new ships. Therefore, the supply coming into the market is expected to be low in the coming years. So this actually is favorable for us as opposed to several years ago when the shipping market was expecting it was very weak. If you recall, in 2015, 2016, the overall shipping markets was quite weak. At that time, due to US, having a very loose monetary policy, interest rate was low. There's a lot of orders booked for ships coming into the market. So as a result, the shipping market was quite weak. But now it is a completely different environment. We are seeing that ship owners are hesitant about placing orders for new ships. Interest rates going up, monetary concerns, as well as the macroeconomic concerns, all put a slow down or in terms of the supply of vessels into the market. So these are the favorable terms that we see for shipping markets. So then the key point then is how will be the demand like? So the demand will then depend on many macro factors, and one of the main factors is the opening up of China. Okay. So if we look at our average charter rates for the past 1 year, 2022, this is on a quarterly basis. For 2022, as you can see, there have been, on the average, every quarter's average daily charter has been quite strong, much stronger than that for 2020 and 2021. So that's the reason why we are able to achieve a record profit in FY 2022. So we are ship owners. We own 10 vessels, small handy-sized dry bulk carriers, ranging from 29,000 deadweight ton to 38,000 deadweight ton. And we time charter these vessels out to our charterer. And the charter income goes into our P&L, and we divide by the number of operating days in order to derive this average charter for each quarter. So these are the 10 wholly owned vessels that we have. Okay. Now, next, I'll move on to our properties. For Hong Kong properties, if you have been following us, our Hong Kong property projects contributed to our profit pre-COVID. And this project actually has been helping to support our profit when the shipping market was down. Now, because of COVID-19 border closure, the Hong Kong property market has been slow. We currently have 4 projects in the market for sale. They have been slow, but with the China borders and with Hong Kong opening, we are cautiously optimistic that this segment will be able to contribute to our profit bottom line for this year and next. Next, I'll move on to our property investment in Japan. In Japan, we have an asset management, wholly owned asset management company, Uni-Asia Capital Japan, which has a property asset management license in Japan. And we specialize in developing Alero projects, small residential property projects, which we acquire land, okay, or houses, as you can see in the picture, and we develop them into 4-5-story walk-up apartment. So the completed projects are typically sold en bloc. Each project takes less than 2 years to be completed, and we have a very decent IRR for all these projects. So these are the pipelines that we have in 2022 as the end of the year. We have 12 ongoing projects for 12 ongoing Alero projects. So these projects is expected to contribute to our bottom line for 2023 and possibly 2024 as well. In addition to Alero projects, Uni-Asia Capital Japan also manage property assets for our clients, and this includes hotel, hostel, resorts, residential, healthcare, medical, group home, etc. So the total asset AUM by Uni-Asia Capital Japan has been increasing steadily, and as at end of 2022, it stands at 36.9 billion Japanese yen. So the asset management business helps to contribute to recurring asset management fees, And in addition, it opens up doors for us in Japan, for new investors, for new partners to cooperate with us. Okay, next, I'll move on to some of the awards that we have received in 2022. And this includes the Silver Award for Best Investor Relations for the Singapore Corporate Awards, for the Most Transparent Company, SIAS Investor Choice Award, and also for our subsidiary Uni-Asia Holdings was awarded 2021 and 2022 Good MPF Employer Awards for 2 years consecutively. So that's all I have for my presentation, and I will move on to our Q&A. Yeah.
Okay, great. Thank you, Kai Ching. It's good to speak with you again this year. And also, I'm very happy that Mr. Tanamoto also joined our discussion today. I think we have a very excellent update on Uni-Asia, and congratulations again for another record year. We think the audience are actually extremely happy to see a spectacular year at Uni-Asia in 2022. We will then, as you talked about that, we will then move on to our discussion. Over the next about 20-30 minutes, we will have a more detailed conversation, and we'll also take questions from the audience. Okay, and before that, I have $1 million question, which you mentioned it again, which I think the audience are also quite keen to ask. Okay, now we have a very strong 2022. How's Uni-Asia's earning outlook for 2023? And also we see that rates has actually coming down. So how will the company's earnings compare with back in like 2020?
Okay, so if we look at the strategy of the group as a whole, we have different assets and different services relating to such assets, as I mentioned in our business model. So we have 10 wholly owned vessels that provide recurring charter income base for the group, and also asset management fees, as well as other fees income that provide additional layer for the group. On top of that, we also invest our balance sheet in properties, both in Hong Kong and also within Japan, in order to derive certain capital returns or maybe even rental income. So with this multi-tier approach towards our income, okay, it actually has given us a very strong base to withstand whatever cyclical downturn, be it under shipping or properties, okay, that we have. So if we look at our track records over the years, during the shipping downturn in 2015, 2016, 2017, our property businesses actually helped to support our bottom line, so much so that we are able to continually pay good dividend to our shareholders. And for the past few years, because of COVID-19, property, especially the property investment in Hong Kong, was not doing so well. But the shipping market was doing very well, and we are able to have exceptional results for the year. So we believe that with this multi-tier asset class, it will be able to help us have a more consistent kind of profits over the years. Of course, we hope, of course, we do hope that we are able to repeat what we have done for 2022. But if realistically speaking, we don't think that is a feat that we can repeat. But having said that, as mentioned, for shipping market-wise, the supply-demand economics favors actually the small handy-size and favors the sector that we are in. So in the next 1-2 years, if you talk to any shipping companies, they are still rather optimistic, okay, about these 2 years. Of course, we may not be able to repeat what we have repeated in 2021, 2022, but it will not go back to the time of 2015, 2016's rates. Okay, that's one. Two, in terms of Hong Kong property, with the opening up of China border, of course, it is anybody's guess whether investors will come back to Hong Kong to purchase. But we are cautiously optimistic that with this opening up, with more for the businesses coming back to Hong Kong, Hong Kong's commercial and industrial building, demand will start to come back for this year and perhaps for next year. So that will also help, we believe, in supporting our bottom line, because we do have pipeline projects ready for sale within these 2 years. And for our Japan project, Japan is still very robust. We have our trademark Aliro projects. As you can see, we have 12 projects outstanding, ongoing as the end of last year, which can contribute to the bottom line. And on top of that, we have new projects that we continually look for within this year. And we are also looking to maybe find new investors outside of Japan to bring them into Japan, to co-invest in new projects all over Japan, not necessarily within Tokyo itself. So with this multi-tier, multi-pronged approach to secure profit, secure income for the group, we believe that we will be resilient, to whatever downturn, be it under shipping or property. So that's our approach towards ensuring that we have a strong bottom line or a consistent bottom line, and we are able to sustain our profit of a certain level, going forward. Then next, it comes to the dividend, okay? And I want to emphasize this. We always get questions, what is our dividend policy, okay? So the nature of our business makes it such that it is difficult for us to commit to pay a certain level of dividend. Shipping, for example, requires certain cash capital in terms of servicing, in terms of maintenance. That's why if you look at, in the past, there were certain shipping trusts, right? Because of all the cash demands of dividend regularly, it actually create a stress on the funds itself. But for us, we are slightly different. We have property, we have also shipping. So what we can say is that if we can pay dividend within our means to shareholders, we will. If we can, we will. And we can see from our track records, even when we are making losses, right? If the losses are due to certain fair valuation or impairment losses due to the nature of the business, we will take out cash and pay dividend to our shareholders. And we have done that before. So what we are really trying to do is to make sure that our income, is resilient, and we can continually pay dividend, whatever the amount, based on our ability, to all our shareholders.
I see. Thank you. Just go back to your answer about the breakdown of profit. I think last 2 years, correct me if I'm wrong, you have like 80-90% of the earnings coming from the shipping business and about 10-20 from property. So you are actually anticipating that this year this proportion will change. I'm not sure whether it's going to be substantially or at least we will change to a certain extent.
Potentially it could change because it's still only first quarter. So anything can happen, right? Because the focus now is really on one for Hong Kong projects is the China border opening up, whether the demand will go back to Hong Kong, and that's anybody's guess because China just opened up. And also for the shipping market, China actually plays a very important role, okay? Because they are the main demand countries for dry bulk commodities, including coals, including steels, and grains and so forth. So with China opening up their borders, most of the shipping companies are quite optimistic for the shipping market, especially towards the second half of this year. Yeah.
Okay, great. Thank you. There is a question from the audience. First, we would like to thank you for a great presentation from you, Kai Ching. And the question is that in the 1 year, last year, since you have our presentation at Smartkarma, the profit has been increased quite sharply and you have more than double your dividend. But however, you see that the share price is actually down since the last time you presented. So why do you think the market has not rewarded your better performance and higher dividend? So are there any other measures that you are considering to unlock the value of the shareholders, given the share price still continued to be at a large discount to the book?
Okay, so we get this question quite a lot, For us, like I mentioned, we were founded in 1997, okay, and we were listed in 2007. And so we have been around for 26 years, If you look at 26 years, it's not a long time, but compared to many companies, even the more famous ones that we all know, some of them don't even last 26 years, okay? So then the question is, what do we really want? Do we want to be still around in another 26 years, another 25, another 50 years? We want to be here for the long haul. Okay, I mean, if you have been following our companies, I have been the CFO for this company for more than 12 years. Tanamoro-san has been on the board for, since the founding. So we want to be here for the long haul. And because we want to be here for the long haul, we want to make sure that when we are able to increase the share price slowly but steadily through our efforts in increasing the bottom line, in working hard to make sure that our bottom line is a good one. We have good balance sheet, we have good P&L, and we can reward shareholders based on dividend. And we do not want to spend too much efforts on other kind of gimmicks or corporate actions in order to have a very short-term impact on the share price. So we have questions on, why don't you do a share buyback? Why don't you do this corporate action? Why don't you do the other corporate action? We think that all these efforts, yes, it works, but it's only short-term. I mean, it is much easier for me. It's actually easy for the company, any company, right? If you look at earnings per share is profit over the number of shares. Is it easier to increase the profit, the numerator, in order to increase the EPS? Or is it easier to decrease the numerator by doing share buyback? It's definitely easier for me to just go out and buy the shares. Within 1 week, I can reduce our shares, we can increase the EPS. But we don't think that is something that's sustainable. We don't think that's something that is fair to our shareholders. So what we want to do is really to focus on our business, focus on making money, focus on making a profit, focus on making sure that we can pay a certain amount of dividend to our shareholders on a year-to-year basis. So this is what we are focusing upon. And we will not try and focus on other corporate action just to make a short-term increase in our share.
Yeah, I understand that. Yeah, I think we addressed the question about share buybacks last year as well.
Yeah.
Okay. Yeah, and one thing I think that would be interested to the audience is that can you provide us an update on the charter expiry as well as renewal for your ship? So how much you have locked in all the charter, how long they are, and what is your plan for renewing the charter in case they come to expire within the rest of this year? So just give us an update on that area so that we have a better idea about modeling the earnings.
Yeah, so we previously have actually disclosed like very detailed when our charter expired. But then our shipping team came back and said, hey, you are disclosing too much. You actually jeopardize our negotiation with a charterer. So you can imagine, right? If a charterer, for example, if they know that you have certain number of ships that's going to be, your charter is going to come off, right? So you will say, hey, maybe if this ship I cannot give you a high rate, maybe I can wait for a while because you have other ships waiting to be chartered out. Okay. So therefore we have stopped disclosing our charter period. Okay, so that's the main reason why we have stopped disclosing our charter period. But what we can say is that we have a mix of short-term charter, 3 to 6 months, and also longer-term charter of maybe 1 year or a bit more. But as I mentioned, most of the parties, in fact, we are seeing certain inquiries for longer-term charters with a much higher rate than the spot rate for maybe 1 year or more than 1 year. Okay, so that reflects certain optimism of the shipping industry for the second half of the year. So for those rates that we fixed earlier part of this year in January and February, we tend to fix them on a shorter period, 3 to 6 months, so that when the charter comes off towards the second half of the year, we are able to catch when the market goes up. So this is what our strategy is. We have a dedicated team in Hong Kong monitoring the market and talking to charterer all the time and managing our fleets, not just our 10 wholly owned vessels, but also our joint venture vessels. And we are always trying to see what's the best mix of charter period for various vessels so that we not only are able to lock in for slightly longer term charter when the rates are good, but also for when the rates are no good, fix shorter term charter. And when the charter comes off and the market is good, we are able to enjoy the good charter market. So, for the past 2 years, the charter rates has been good. Okay, but I can tell you, not all ship owners are able to enjoy this because there are certain ship owners who have long-term charter that covers 2021, 2022, and they just see the rates going up, but their charter cannot be fixed at the higher rate because they are fixed at the lower rates, maybe fixed in 2018 or 2017 for 5 years or so. So we are well aware of that, and we have a dedicated team very close to the market and always talking to the players, and different players, the ship owners, our charterers, our brokers, in order to make sure that we can make the right decisions.
Yep. Okay, thank you. So, also on the macro front, what do you see the recent banking crisis with respect to like SVB as well as like Credit Suisse on the market? And do you think there is a global credit tightening? And especially, I would like to see that. Do you feel any change in the availability of ship financing that affect the supply going forward?
Yeah, so interestingly, you see, after the Asian financial crisis, there was in 1997, right? The Asian banks itself have actually strengthened and become stronger, right? So if you talk to many, I've been to Taiwan and talked to the Taiwanese bank, we speak to our Japanese bank. Many of the Asian banks are actually not so much affected by the impact of the US bank. Maybe they are not as globalized, as they used to be, right? The Asian banks themselves, we have actually strengthened the internal controls, and more so than maybe the US counterpart. So if you see SVB, Credit Suisse issues, but if you read the papers, most of the Asian banks do not have any negative news being reported. Okay, so in terms of shipping, most of our financiers are actually Japan leasing company, Japanese bank, and also Taiwanese bank, Taiwanese leasing company. So these are the main candidates for our fundings for borrowings. Of course, previously we have European banks, but after the financial crisis, the European banks also start winding down. So those are most of our financings. And we all know that in Japan, the Japanese bank, they still have a low interest rate environment. They still have quite a bit of cash. They are still willing to do financing with us. Okay, so we in terms of financing wise, we don't see, at least for us, we don't see a very big impact. Okay, most of the loans that needs to be refinanced, we can still refinance. So there's not real impact that we can see.
Okay, yeah. How diversified are your customer portfolio? I think why I'm asking that question is very much, I'm not sure that, do you anticipate any escalation of, counterparty risks in this year, given that, developed countries are facing challenge in terms of, economic slowdown or recession. So is there any risk for counterparty?
So most of, for the past few years, our main contribution of income is charter income. So when you time charter a vessel out, the charterer will pay the fees upfront for the month before they use the ship for the month. So if they don't pay upfront within 5 days or so, in accordance with the charter agreement, you can arrest the ship, take over the vessels. Okay. But having said that, we do have a very constant review of the creditworthiness of our charterer. So for our charterer, they are normally, especially for longer term ones, creditworthy with good credit rating charterers. Okay, but these few years actually, the risk of our charterer having problems actually has been reduced. If you look at 2015, 2016, actually at that point in time, this risk is actually much higher. Okay, but so far, based on our experience, we do not have any issue with the creditworthiness of our charterer. Now, in terms of property-wise, most of the partners that we do deal with have very strong financials. So we do not really have any issues so far as well.
Okay, great. Then since you mentioned about property, we will move on to about the property business of your company. And how is the state of the property market in Hong Kong? We have seen some recovery in the residential side, but after reopening particularly. But what about the company, I think, is more commercial as well as industrial or office. So what's your outlook on this, and also any plan for disposal or more acquisition for this year?
Yeah, so our Hong Kong property, we actually invest through consortium led by our partner First Group. We currently have the number 4th project that we worked with them. The first 3 projects has already been disposed of. So in our presentation, we always call the 4th project, the 5th project, 6th, 7th project. These 4 projects are actually in the markets for sale. Especially the 4th and 5th project, they has been on sale since last year. So the construction, especially for 4th, 5th, has already been completed. Now, the sales have been slow. Okay, that's why for the Hong Kong project, it has not contributed to our bottom line for the past 2 years. the Hong Kong borders just opened, and it is anybody's guess. So we are still cautiously optimistic that the second half of the year, or perhaps even for next year, it could be better. Okay. Hong Kong government is trying to attract more tourists to go back to Hong Kong. They are doing all sorts of campaigns to try to attract the businesses back to Hong Kong. And we all know, in the past few years, many banks have moved out of Hong Kong. They are saying that businesses move out of Hong Kong. But we have also seen the similar thing happen to Singapore before, when Singapore previously have certain issues. Banks are moving out, and then they will all come back. So we believe that once business go back to usual, okay, the demand will be able to pick up. Of course, the question is when. That is anybody's guess. But China government, we think they will want Hong Kong to succeed. Okay, Hong Kong is part of China, and the one country, two system, they want to show the world that it works. Okay, they want to make sure that Hong Kong continue to prosper. Okay, so this is something we think that the China government is committed in doing. And therefore, we believe that the Hong Kong property market will be doing well. Probably not next, even if it's not this year, maybe in the next year or the year after. Right. The question that I always ask investors is, do you think that Hong Kong really will disappear from the face of financial markets next year, the year after? If the answer is no, then the property market itself will also follow. Right. People will still go to Hong Kong to do business. Now, in terms of our Japan property, Japan is fast. With the weakening Japanese yen, there are many investors wanting to invest in Japan. So one of the strengths of Uni-Asia is that we have offices in Japan. We have English-speaking Japanese, who understand the Japan market. So one of our strengths is to bring overseas investors, be it in Singapore, in Hong Kong, or other parts of the world, to invest in Japan itself. We can co-invest with them. We can help them to identify assets for them to purchase, and then help them asset manage. So this is a strength, and we are continually developing this expertise. So if any investors who are keen to invest in Japan and don't know how to go about doing it, feel free to approach us. We can talk with you to see what are the opportunities and options that we can offer you. Yeah.
That's great. Okay. We talk about the company's future diversification plan in the last year. I think that's basically, you mentioned to us that you are going to stick to like shipping as well as property. So is there any change in this strategy, given that you have a strengthened financial position and any new opportunities that you have spotted? Okay, so right now, the shipping market, like I mentioned, is expected to be the supply is expected to be slow in the next few years. So second-hand ships is one options that we possibly have. Or we could, maybe when the time comes, dispose of some of our older vessels to invest in more eco-friendly vessels. So these are some of the options that we are weighing. Okay, but we are not in a rush to actually purchase any new vessels or any huge commitment to our Hong Kong property projects or so forth. One of the reasons is we want to build up a strong balance sheet. As we all know, the US, China problem, the war in Ukraine and so forth, we believe that in the next 1-2 years, more opportunities could arise. And we all know that Saudi Arabia's OPEC has actually increased oil prices, reduced the production of oil, and oil prices have gone up. So there are all these factors that may make opportunities arise in the next few years. Okay, so there's no rush for us to want to go in. We don't see that opportunities closing maybe tomorrow or the day after. Okay, we believe that opportunities may even there may even be more opportunities coming up. But the most important thing is, do we have the resources? Do we have the cash? Do we have the ability to purchase when the opportunity arises? So this is what we are carefully monitoring and trying to build up a strong balance sheet and a strong cash float in order to take advantage of such opportunities when they arise. So we are not in the rush to try to acquire any assets, but we are studying every opportunity very carefully. Yep. Okay. And I've also a question about the share price, which I want to borrow your idea. I think year to date still, we are talking about your share price actually performing quite well so far in 2023. So do you think the market is somewhat like too bullish or too bearish at the moment in terms of the share price, or they have already factored in a lot of good news good expectation about 2023?
Yeah, to be honest, I really cannot comment on the share price, because there are so many factors that is really beyond our control.
Yep.
So when we come to a share price, we are always back to the same fundamental. We believe that long-term investors are rational. Long-term investors will reward companies who have integrity, who will try to work hard to make company for investors. So for us, we are unique in a sense that we are not our whole management, our whole philosophy is that we want, if you look at our annual report and the corporate philosophy that we have, we want to be able to make money honestly and to reward our stakeholder accordingly. We don't want to take unnecessary risks only to collapse tomorrow, right? So that's why if you listen to what we say, we are always very cautious. We are very cautious when we deploy our funds. We are very cautious when we reward our shareholders in terms of dividends. Are we able to pay a certain level of dividend next year? Do we have enough cash for investments? Do we want to take our cash and do share buyback? Do we want to do all these things? So we always have a lot of things going through our mind. We are quite cautious, in fact. So one of the reasons that we want to consider is really we want to be here for the long haul. We want to emphasize that we want to be here for the long haul. We don't want to take unnecessary risks only to be off the radar 2 years later, 3 years later.
Yeah. Okay, thank you very much. I think we really enjoyed the conversation with Kai Ching, and I hope investors now are able to understand more about the latest strategy about the company as well as the outlook for Uni-Asia. I believe that 2023 is definitely a volatile year for both the shipping and equity market. But I think Uni-Asia should be quite well equipped to face the challenges. So before I hand back to Sanam, so is there anything you want to add, Kai Ching?
Yeah, so maybe Tanam Rosa, do you have anything to add?
Yeah, okay. So thank you very much for joining us. And, well, in a short term, as Kai Ching mentioned, we're expecting the shipping market will be recovering toward the end of this year. So I hope we can enjoy a good market in the second half of the period. And the Japanese market also are very stable in view of the lower interest rate. So we have reasonably good opportunity to invest in Japanese properties. Hong Kong property, as Kai Ching mentioned, we need to wait for some time until the market will recover. So overall, in a short term, we are happy to have a good opportunity and a good business for the time being. And in a longer run, the challenge for us is, particularly for shipping, we need to renew or rebuild our shipping portfolio. 10 wholly owned vessels, out of 10 wholly owned vessels, 5 vessels are relatively old. The average age is 12 years, and they're relatively smaller for handysize. So we need to consider to dispose those vessels and invest in the new design vessels which can comply with the environmental regulations.
Yep.
At this moment, no answer, as Kai Ching mentioned, no answer in the market for what kind of vessels, what kind of fuels should be suitable for the handysize vessel. So we need to very carefully monitor the market and choose the best timing to sell those older vessels and invest in the newer vessels. So this is one of the most important thing for us in a longer run. And also in a longer run, for Japanese property market, we'll try to increase our asset under management. So our core products in Japan is a so-called Aero series, which is a smaller residential development project. Yeah. So in order to increase our asset under management, we are considering to invest in the relatively bigger project in Japan, so that we can increase the asset under management, which can give us a very stable and recurring fee income to us. So in the long run, those are the what we are focusing on, so that we can deliver the good value to our investors, and we can continue paying dividend So far, we have paid dividend, continue to pay dividend, 11 years in a row since fiscal year 2012. So we would like to continue paying dividend to reward our shareholders. In order to do so, we are considering that kind of longer term plan at this moment.
Yeah. Okay.
So thank you very much, Mr. Tang. Yeah.
Thank you very much. It is nice to speak with you, Mr. Tanamoto. And I think we got a very strong understanding about the outlook for Uni-Asia. And basically, I think you guys are actually looking for opportunities now, but be patient.
Yeah.
Okay. Okay, great. Thank you both. And let's hope to speak again in your next corporate update. And by now, thank you very much. And over to you, Tanam.
Thank you, Osbert, for some very interesting questions, and a big thanks to Kai Ching and Mr. Tanamoto for a detailed insight into Uni-Asia, the challenges in its sector, and opportunities for Uni-Asia. I would also like to thank our attendees who joined this session live. With that, I would like to wrap up this week's corporate webinar. Thanks again, and have a great week ahead, everyone. Thank you.